Crypto tax tips for 2025 to the 2026 tax year. Now, have listened to this and I can almost guarantee you'll learn something new or save yourself some money. The first one is make sure you have all of your data and transactions. Now, luckily for us, crypto is on the blockchain. What this means is that the data is very likely to be obtainable via CSV file or API integration. Track all disposals, and I'm talking about your gifts, your swaps, your sales, and maybe even your burns itself. Again, this is on the blockchain, so by having CSV files or API keys, you might have all of that data already. Understanding the difference between income tax regime and the capital gains tax regime. For example, if you are buying and selling and it's not counted as a trade, you are likely going to be within the capital gains tax regime. However, staking, mining, airdrops, rewards, and self-employment, or in lieu of service, all come under the income tax regime. This moves your tax brackets from 18% and 24% to 20%, 40%, and even 45% in some cases, as well as national insurance, depending on what you've actually earned. Don't forget to use your annual exempt amount. It's currently set at £3,000 per person per year. What this means is you can actually make gains up to £3,000 and pay zero tax on all of that. Now, if you don't use it, you will lose it. An important thing to remember is that you probably need to start reporting now if you haven't done before. This is on the assumption that you felt like it was impossible to deal with or highly inconvenient. With CAF, the crypto asset reporting framework that has come into play from the 1st of January 2026, there's a lot more pressure from governmental bodies to close that tax gap within the crypto space. And what that means is, after a year's time, your centralized exchanges, your brokers, and anything that's considered an RCASP would have an obligation to report your data to governmental bodies if there is a need for it. Now, don't forget to plan early. Make sure you set aside funds, not just for your taxes, but to actually take time to do this, whether it's yourself or through someone else, like me. A big myth I want to bust right now is that if you have self-custody wallets, it's hidden from HMRC. That is not the case. And even if it was, it doesn't matter. If you have an obligation to report and/or pay taxes, it's a legal matter which you need to make a decision on, because not making a decision is a decision in itself. Now, depending on your situation, you might be able to deal with this yourself using readily available crypto tax software. If you're in a situation where it's a little bit more complicated than you'd like it to be, or you just don't quite feel comfortable, maybe hiring an expert is your best option. Now, when looking for an expert, the things that you must keep in mind is that they need to be a specialist within the space. What this means is it will cut all the jargon, all the explanation that you'll be giving to your accountants as to what is going on, and they can focus straight on the compliance, tax planning, or maybe even HMRC investigatory work. A great tax top tip for the crypto space is if you are planning on leaving the country, do not forget that this is a highly complicated situation. For example, did you know if you were to leave the UK then dispose of your assets, you might be in a situation where you can't actually become a UK tax resident for 5 years at the point that you leave. Because if you do that, all of these tax savings you may have been able to save come back into play the moment you set foot in the UK. Now, one thing I get asked a lot is what are the penalties and interests involved in all this? Now, don't get me wrong, there are penalties and there are interests, but the big difference is if you come forward and it's an unprompted disclosure, so HMRC haven't asked you to, those penalties will significantly reduce. And in some cases, these penalties could be up to 100% of your liability. The last tip is if you are married or in a civil partnership, you may be in a position where you can actually transfer your assets between spouses completely tax-free and then utilize their annual exempt amount every year of £3,000 per person. Now, please be aware, you can't take that allowance and use it yourself, but you can give assets so that your spouse may use it themselves. So if you have any questions whatsoever, just comment below and I will try and get to every single person that comments where humanly possible. But if you need more specific or bespoke advice, just reach out to me and we can have a discussion.